Apple now lower despite reporting its fastest quarterly revenue growth in more than 3 years. Let's get to Steve Kovac with more on what was happening this quarter for Apple. Steve.
Hey, Mike, I want to channel my friend Steve Leisman here a little bit because he says so often the tariffs have to come from somewhere, and we got a great example of that last night with Apple. They said for the June quarter, $800 million in tariff-related costs. That is better than the $900 million they initially expected, and it's only going to get worse from there, guys, as they move into these higher volume quarters. For the September quarter, they're estimating a $1.1 billion hit in cost because of these tariffs, and even on the call, Tim Cook was kind of hinting that even though they're not going to give a specific number for quarters beyond that, as they move into these bigger quarters, especially the December quarter, which is their highest volume quarter, higher volume means higher tariff costs. So you can expect that number to increase again in the December quarter. That's, of course, assuming everything stays as it is right now. The big question, guys, is going to be about price increases. So far, Apple has been taking that hit on the tariffs on the margin front. That they guided between 46 and 47% margins for the September quarter. We're going to get new iPhones in about 6 or 7 weeks here with potentially new pricing. So the question becomes, leading into that iPhone event, do they raise prices, or as the tariff picture gets worse into the rest of the year, are they going to just eat that on the margins, guys?
Yeah, Steve, thanks for that setup. I mean, you know, Bill, it seems like the stock faces a pretty high burden of proof. Right? I mean, yeah, they had the pull forward of some iPhone demand. They did have a beat. Everything seemed like it checks out okay. Services even better than expected. We're backing off at the stock in a weak market, admittedly. So how would you treat it?
Yeah, I mean, we're actually pulling the trigger in increasing our exposure in Apple. We're underweight Apple with a 3.5% position in portfolios. A couple weeks ago, we began trimming. You know, some of the names up top, like NVIDIA and Meta, and some of them just a little bit off to give us some flexibility and sort of a little bit of a rebalance, if you will. I have more of Apple that I want to buy. I talked about it in the show yesterday. We're looking at 190, 195 area. But this was a good enough report that I think there's enough negativity around Apple that I think in a sideways to potentially down market, it could sort of hold ground fairly well. You know, again, some of the tariff, the tariff cost it's revised higher. Is that enough? Maybe. I think there's going to be a lot of questions moving forward. But I feel like there was a tone from Cook in the call and in the conversation that they really are going to ramp up the AI efforts, and we're going to start to see that in the back half of the year. And I just want to make sure I'm not too underweight. But again, I think this has been as 3 slices. This is the first of 3 slices of buying that we're going to do in Apple.
Jason, did you see anything to either have you rethink your assumptions about it, or figure maybe it can even get a little bit less expensive at some point?
Yeah, so I think for me, the biggest takeaway was Cook is obviously open to M&A activity, right? Yeah. I mean, that's always been the story. They got $133 billion worth of cash. You know, this $100 billion buyback has somewhat been an autopilot for the last few years. Sure. What if some of those dollars are redirected? I think folks and investors are very comfortable with the idea that Apple needs to look externally to accelerate this story on the AI poll raise, and I think they're willing to do so. The numbers, I think we all just said it. I mean, some of it has been front-rutted due to tariffs. Mm-hmm. You know, I mean, obviously the earnings and revenue beat were a lot different than what we expected. I mean, 10% revenue growth, 12% earnings growth. With 4 and 2% were those 2 numbers coming in. So the quarter was solid. China was good. Services were good. So, but I think the big story is the M&A potential.
Sure. I mean, Jim, I mean, they detailed the tariff exposure, which is like a big number in the real world, a small number for Apple, really. And you can kind of play either side of it and say, well, this is why companies can, in aggregate absorb that. Not that it helps, but it's not something that should change the overall complexion of the financials.
I think that's an excellent way of summarizing it. All right, we're in a new world where there are tariffs. As Steve Leisman said, I think his expression was, we're building a fortress of tariffs around this country. Fine, that is the hand we've been dealt. Apple will play that hand. This quarter, whether we think the tariffs, whether they managed them well or it hurt it, it doesn't change the long-term strategy for Apple. If you own it, and I own it, and like Bill, I'm a little underweight it, what I would say is its valuation right now is smack dab in the middle of the valuation range for the last 5 years. It's not cheap. It's not expensive relative to history. And I think if you don't have a position, you certainly can build it out here. As Bill just said, and I agree with you totally, or at least what I think you said was, hey, I've got more to buy. I'm going to take my time. I've got more to buy of Apple as well. I'm going to take my time. If it gets down to the low 20s as a forward multiple, that'll be terrific.
Yeah, from about 27 or so
exactly.
At this point. And just to be clear, to be underweight Apple, if you're benchmarked to the S&P 500, means owning less than like 5.7% of your portfolio.
Right,
stock,
it's still a meaningful position.
That's always the weird game. Everyone says, people are underweight these names. Well, that's because nobody runs with, 6 stocks worth a third of your portfolio. At least not many people.